The industrial production has fallen, the GDP is decreasing, the inflation could rise, government's revenue is at risk. Above all, what happens if oil prices start to rise? What if the GDP tumbles down? What if the government's fiscal math goes haywire? All these questions might be coming around as we enter the third quarter of the financial year 2025. There are already some murmurs in the street regarding India's slowdown. The Economist asks, is India's economy slowing down? The Bloomberg writes, India's post pandemic revenge spending is running out of steam. I feel that this is the right time to talk about India's economy. What is the state of India's economy? My name is Swapnil Karkare. I am economist and chartered accountant, and I am here to discuss India's economy. So what exactly is happening with our economy? भारत की अर्थव्यवस्था में क्या हो रहा है? भारतीय अर्थव्यवस्थेमध्ये काय चाललं आहे? I have made this video in 3 languages: English, Hindi, and Marathi. So if you are comfortable with any other language, please stop this video and watch another video. You will find the link in the description and you will find that video in my channel itself. This has already been a lot of effort. So why don't you pause for a bit, like this video, and subscribe to the channel. Let's start. Whenever we want to analyze the economic condition, there are a few criteria which we have to consider. First, how people are buying things. That is called consumption. Second, how businesses are producing things. That is called production. Third, for that production to increase, are businesses taking any steps? That is loosely called investment. Fourth, how the government is earning and spending its money, which is basically the tax that we pay and the facilities we get from the government. Fifth, how is the relationship with foreign countries, which includes exports, imports, and other related things like foreign currency and foreign loans. Sixth, inflation. And seventh is a sentiment. Roughly, these are the 7 different elements that we need to understand about any economy. I might not cover each and every topic in depth today. First, consumption. Until September 2024, the consumption was a little bit slowed down, but the current festive season might change the game. There are a couple of good things that are happening. We know that Amazon, Flipkart, Meesho, and other e commerce platforms start their different kinds of sales in September and October. That has been very successful. It usually attracts a lot of attention and it breaks all the previous records of number of orders or the amount of orders. There is a peculiarity in this kind of sale. We see a very good response from tier 2 and tier 3 cities and towns. Meesho, which is a kind of popular in such towns and cities, has created records. It has also attracted a lot of new brands like Mama Earth, Dabur, Denver, Bata, Titan, and so on. But the question is, every time we see that these sales get a lot of traction, but will that demand be sustained throughout, say, March 2025 or March 2026? That is a bigger question. If you look at the sentiment data by RBI or any other organization, you will see that usually the third quarter sentiment is good, mostly driven by festival or wedding season. Last year, I had made a video on economics of Diwali titled Diwalinomics. If you haven't watched it, I would recommend you to go and have a look at it. It shows how Indian economy performs on Diwali days. But right now, we are not talking about the 5 days or one quarter. Our perspective is for this year and the next year. So, barring an optimism around the festive season, the past data shows something else. Under GDP, there is an item called consumption, but the GDP data is available only for June 2024. September quarter data will come in November. And we don't like to wait, right? So we analyze consumption through different indicators, which kind of shows how much money people have or are spending on different things. One such thing is income tax. The income tax data shows that until August, our income tax payment has been lower. So we can infer that there is some issue with the people's income. Then comes employment. If you have employment, then only you will pay tax, right? The unemployment rate in September is around 8%. In April, it was slightly lower, but if we compare with September 2023, then the unemployment rate has increased. Another job related indicator is Naukri Job Speak Index. It tells us how the hiring has been happening in the country. The data is given by Naukri.com, the largest job portal in India. That shows the situation is gradually changing. Hiring has improved, but the overall growth has been negative this year. Hopefully, by the end of this year, you might see some more improvement. Here is the chart from an article that I wrote for Trendline. You can see that the indicators that show improving situations is on right hand side of the divider, and on the left hand side you will see the worsening indicators. So all in all, the conclusion for consumption is that it is okayish. That's not improving at a speed that we want. But the festive season will most likely be healthy, but it remains a puzzle if the momentum will continue throughout this and next year. Also, there is a bit of urban distress. One proxy for that is car sales falling down, while the rural areas are improving, which is shown by almost all the improving indicators on the chart. Let us move on to second point, which is production. If consumers are not consuming, then why would businesses produce, right? Demand is the most important factor for businesses to decide how much to produce. And demand depends on various factors. Some of them we discussed just now. The Index of Industrial Production, or IIP, until August 2024 shows that the production has fallen. Now, along with this point, I would like to highlight the third point of investment. In simple terms, if the demand is low and production is also low, will the business invest in additional capacity? Let me explain the capacity in simple words. If I have a factory which can manufacture 100 shirts in 1 month, currently I see the demand for my shirts is only 60 shirts per month. By considering this demand and probably by having some buffer, I will manufacture 70 shirts a month, right? This is called my capacity utilization, which is 70%. So in this case, should I think of manufacturing 120 shirts? No, right? If the situation warrants that, okay, the demand has increased, probably in some month 90 shirts were sold, so in that case I have a signal that yes, this is the time to add more capacity. Right now many businesses are not investing. This is called the capital expenditure, often termed as capex. Therefore the capex is low. HDFC Bank's Mayank Jha has put a nice post on LinkedIn showing that in some sectors the companies are willing to invest but not investing. In some sectors the companies are willing to invest and has also invested as promised. But in some sectors, the companies are not willing to invest at all. So different sectors have different issues. But overall, if you see, India's capacity utilization stands at 76%. It has been around that level for almost last 10 to 15 years on average. Well, demand is one angle to it, but at the same time, profit is another angle. It is said that companies' EBITDA margin needs to grow or should remain high for the company to invest more. EBITDA is earnings before interest, tax, depreciation, and amortization. For non finance works, it is another way to calculate profits that excludes certain expenses. In simple words, it is called operating profit. Currently, there are various uncertainties. The most common is rising cost of raw materials. Therefore, some companies or sectors are waiting for the raw material prices to come down. Along with complaints of private sector not investing, we are also seeing government not investing much. The government usually spends on roads, railways, kind of infrastructure. Due to general elections and monsoon, the government has spent lesser this year than the last year. You can check that in this chart. At the same time, there is another problem for the government. Its tax revenue is also declining. Income tax, corporate tax, and GST all have shown some slowdown signs. So that means the government is short on money and also its target. Therefore, we have to keep an eye on how much taxes the government earns. And if there is an improvement, spending on infrastructure will not be a big problem. But there is one small hindrance that is called fiscal deficit. Every year, the government decides that, okay, we will not spend X rupees over our income. If that exceeds, the government has to borrow more than what it has already announced. If the government borrows more, the bond markets get upset. Right now, India's bonds are included in global bond indices. This has been a commendable success for India. But that also means we have to be more responsible for our actions. If we slip away from our targets too much, then that is a negative sentiment in the market. Therefore, I hope that the government will keep fiscal deficit targets intact and will follow it. In a way, that means if at all the government is short on the tax revenue, the infrastructure spending will take a hit. I have also made a couple of videos earlier on government finances and budget. I have explained all the complicated terms like fiscal deficit, public debt, revenue, capital expenditure, so on and so forth. So please do watch them if you want to understand these things in detail. If you are a stock market guy, you will know what does that mean. A lot of companies depend on government related work like building roads, railway lines, etc. Those companies will get affected. New tenders won't come, and that will hit the companies directly. And that is already happening. Some companies' stock prices have fallen recently. So that covers point number three, which is investment, and point number four also, the government finances. Now coming to fifth point, international accounts, which includes India's exports and imports, which are in a comfortable position. There are no major issues that can impact India's economy directly right now. Oil prices is one thing, everyone is talking about that, but I don't think oil prices will be so high that it will land us in a problematic situation. There are two articles, one from Bloomberg and one from Economist, which indirectly tells us that oil prices will come back quickly to the current levels, even if they rise very high. India has a lot of foreign exchange reserves, which cushions us from unforeseen events. So, this is one area I would like to say that we do not have any major concern. There are a couple of more issues in it. One is, what if the US economy tumbles? And second is the declining foreign direct investment, or FDI, and foreign portfolio investments, FPI, which kind of bothers me. Now let's move on to point number six, that is inflation. Prices of daily needs like groceries, vegetables, and fruits are rising. That has led to an increase in CPI, which is Consumer Price Index, and WPI, which is Wholesale Price Index. See, due to rising prices of necessities, people will not spend on other things. For example, they will postpone buying a new car, a fridge, or phone. That means low demand. Low demand means low production. See how all these things are interlinked. Again, higher prices means that RBI may not cut interest rates very quickly. RBI cuts interest rates only when inflation is low. That means mostly for the next 2 to 3 months, interest rates will remain where they are. When interest rates are higher, loans become costly. Generally, it is assumed that if RBI cuts rates, banks can give cheaper loans to borrowers. That gives industries some relief. Their finance cost comes down. So, if the company wants to increase the capacity from 100 to 200 shirts a month, it will be good for the company if banks give loans at cheaper rates. Higher interest rates, therefore, becomes another reason why companies do not invest in capacity addition. Now, let us move on to last point, which is sentiment. We can see in the different surveys, especially RBI's, that currently the sentiment is down. But when asked about the future usually means either next quarter or next year, then people are becoming more optimistic. Even businesses are becoming more optimistic. So, this is what is happening currently in the economy. Please read my article on Trendline. I have tried to include as much as possible in this limited time. Let me know if you have some doubts or if you want clarity on something, or even if you want another part of this video. Also tell me if you would like to see such kind of videos more often than the others. Thank you and see you soon with another interesting topic. But please don't forget to like, share and subscribe.